So traditionally, freight rates are driven by the balance of supply and demand. And if you look at the way that load factors on multiple trades have trended, freight rates have tended to follow that. But recently, that correlation has become less so. And the big question has been why. So for example, Drewry tracks freight rates across multiple trades, and we forecast freight rate development. And if you look at the way that, say, east-west rates changed over the past few years, in 2011, the load factors deteriorated as there was excess capacity in the market, and therefore freight rates across east-west trades fell. And then in 2012, load factors improved as capacity was corrected and freight rates rose, as you would expect. But last year, in 2013, despite strengthening load factors on east-west trades as carriers used this practice of skip sailings to manage capacity, freight rates actually fell, which is contrary to what you would have expected. And for next year, we believe, or rather this year, we're forecasting that freight rates will fall further despite the fact that load factors are likely to strengthen, because carriers are using more and more capacity management at a trade route level in their attempts to support freight rates. So the key driver that what's changing that is their focus on unit costs, and the fact that unit costs have been falling as a result of the deployment of these large new vessels. So if we look at the projection of unit costs, they fell last year, and hence why we saw rates fall. And we're projecting a further fall in unit costs this year, which will lead to freight rates falling as well. So we're not saying that the relationship between freight rates and supply and demand has become decoupled. There clearly is still a very strong relationship, and ultimately what is weighing on rates is the excess capacity in the market. But what is happening is that there are other factors at play that are having a bigger influence, and particularly slot cost is, because it's enabling the lowering of the slot costs is enabling carriers to compete profitably, at least some of them, at lower freight rate levels. And the highly competitive nature of the shipping market is translating lower slot costs into lower freight rates.